Hey now, it's Danny Burt here, today's host of the Growing the Future podcast. We're back with season 4, episode 12. You can sign up for our newsletter at growingthefuturepodcast.ca to get emails about our new episodes. Find all of our past episodes there. Make sure to give us a follow on the social media platforms out there and our YouTube channel. You can see the videos of these conversations. You can also find the Aberhart family of companies online, starting with aberhartfarms.com to learn more about our farming operation in Saskatchewan. Suregrowth.ca to learn more about our precision agronomy consulting services offered there, and convergencegrowth.com where they accelerate solutions across food, health, and agriculture, and last but not least, aberhartagsolutions.ca where we deliver one-of-a-kind fertility solutions of the future to your farm. My next guests are part of a $60 million venture capital fund that is thrown out the Canadian playbook when it comes to venture capital, reinvented it, rebuilt a new investment approach to fit the world of ag tech. We all know how special agriculture is out there in business. It is a different beast, let's be real. They bring together key ag leaders from across Canada that believe Canadian ag tech will flourish in smaller ecosystems. So this is happening right here, folks, in our backyard. This podcast, to me, is a bit of a journey. We've spoken to a number of companies that are involved with this fund, including Untitled Chapter and Lucent Biosciences, and we'll hear about some of the other investments that this fund is making with these gentlemen at the leadership of the helm. And of course, we spoke with Jordan McFarland on the podcast, who's a tech incubator manager at Cultivator and been spending lots of time with Cultivator at the farm show and their events. So it's just a really exciting group of people that I felt was like family to be a part of, actually. So I'm really excited to talk to these people because these gentlemen are actually providing the money that's powering a lot of this innovation, and ag tech's very exciting. So first, let me introduce Sean O'Connor, which is a very 007 name, by the way. Congratulations. Head of Conexus Venture Capital. I mean, he's got to be a boss. He comes out as Sean O'Connor. This man's destined for greatness. Head of Conexus Venture Capital, who runs the VC fund on behalf of Conexus as well as Emmertech. Hey, how's it going, Sean?
Good, man. Thanks for having us.
Hey, it's going to be great. Also in the conversation today is Sean's counterpart, Kyle Scott, who's the managing director at Conexus Venture Capital and Emmertech. How is it going today, Kyle?
It's going awesome, Dan. Great to see you again.
Yes, you too. Looking forward to this conversation, gentlemen. You can find these guys on Twitter, LinkedIn, and on the site, conexusventurecapital.ca. Today we're going to talk about, I wanted to call you guys angel investors, but then I realized, well, technically you're actually venture capital managers. So how does one become a venture capital manager when they grow up? What is it like spending other people's money? What is happening in ag tech on the Canadian prairies? I mean, my curiosity is just running at an all-time high, gentlemen. So I guess the first question that anybody who's listening to this, wherever they are, maybe in the tractor or whatever, is wondering, like, what is the road to become responsible for such large amounts of capital to be deployed in responsible ways? And so who is the more dominant speaker here? Like, this is going to be very telling between you guys are partners, right?
You're gonna see us fight over the microphone here as we go.
Airtime. Sean, do you want to go ahead and tell us about yourself first? Or is it?
Yeah, totally. I think and there's also really kind of two traditional pathways in to the venture capital space, and we both come from the opposite ends of that. So I think it should be hopefully enlightening. But my background was initially from the tech world. So we built and scaled a fintech company. It's a financial technology company called GroupLend, and then became Grow Technologies. Through that process, I learned the ins and outs of how to build and scale a company. We raised over $10 million. Were acquired by a bank, ATB. And through that, got to know the Conexus folks fairly well. So Eric Dillon was the CEO of Conexus Credit Union at the time, and Neil Cooper, the CFO here in the leadership team, and connected with them after I'd left Grow, because they had this idea of building a venture capital fund based here in Saskatchewan. The premise was fairly simple. Saskatchewan, and really Manitoba is the same way in terms of what it's produced. But if you look around, we had GasBuddy and Vendasta and IQ and Solido and Skip the Dishes born out of this province, yet less than 0.5% of all the venture capital in Canada ended up here. So the idea was could we put together a fund that's boots on the ground, focused on the prairies, bring this tech nerd out from Vancouver, it's where I was living at the time, to help kind of put the fund together and really catalyze the ecosystem while making all of our investors lots of money. And that was my entrance in, was from the entrepreneur's angle. And I'll kind of stop there and pass over to Kyle for his background.
Yeah, sure.
Sure, Kyle, you're from Yorkton, Saskatchewan originally, you and your wife, so it's very close to our homeland. So
Yeah, exactly. So no, I'm originally from the good egg community of Yorkton. I took so Sean brings the background of phenomenal operator experience, having grown and scaled the businesses, and then my background is more in professional services around supporting those entrepreneurs, and then also on the private equity side of actually doing investing, but mostly later stage investing. So more grown up companies with pretty significant revenues, have been around for a while. They generally make a bunch of money, and you come in and are investing in those companies versus what we do now in the venture capital space of really catalyzing young, growing, and emerging companies. And so, like I said, I've started my career in Regina. I moved out to Toronto to do a bunch of the dorky finance stuff for 6 or 7 years, mostly in consulting and private equity. And then I now call Victoria, British Columbia home. And so it feels like Sean and I basically starts in Vancouver, goes to Saskatchewan. I start in Saskatchewan, go to BC, and we'll see how many times we make that trade back and forth here going forward, I suppose.
I think the
tell us a
important
little
thing
bit
to
more
take
about this
away,
partnership. Go ahead, Sean.
so the important thing to take away from this is that I'm newly moved over to the dark side, whereas of being a professional investor, whereas Kyle's always been fairly evil in that
Well,
construct.
to quote The Dark Knight Rises, like I was born in the darkness, you're simply molded by it, something like that. Uh-huh.
Whoa.
Oh man.
I was wondering about you guys as partners, and if there was some parallel between yourselves and comic book heroes. You obviously have your own lanes and you stick in them, but who's Batman and who's Robin here? Or what is the dynamic on a more personal level between you guys?
Yeah, it's a good question.
Oh,
Some days it's more Batman versus Superman, perhaps, than Batman and Robin. But oh,
I
Evil
think in
Superman or
this
good
scenario,
Superman?
we've never been described as the heroes in any story, so I think this is the part
Oh,
that
you're
we're
always the
trying to get
villain.
asked to for the question. No, just joking.
yeah.
I think
Well, what
in
is
terms
it
of
like? What is it like getting money? Like, you've got to sell the concept of giving you guys money, and then you have to put it to good work, and then you have to be responsible for the results. Like, what is it like coming into work Monday morning after the long weekend, as a superhero or villain? Tell me how you guys feel.
No, I was just joking. We see ourselves as, definitely not the superheroes. We see that the founders would be the people we invest in, but we're on their side and doing some menial tasks to support them. Call us Alfred if we have to be anything in this equation. But
Whoa,
in terms of
paradigm shift.
yeah, the question in terms of the construct and how you put these funds together, it is a bit unusual, right? Because we're not using our money. We're going out and asking regular folk, rich regular folks to invest in our funds, and we've got great support from in our first fund. We'll get into Emmertech, what makes it different, but our first fund, it's Conexus Credit Union started it and brought in a bunch of other credit unions, and then a whole bunch of high net worth people based around Saskatchewan invested in the fund. And the premise is that we believe we have the best entrepreneurs in the world here in Saskatchewan and across the prairies, and that if you just untie that one arm behind their back, which was access to capital, that they can really build some impressive companies. And that really resonated with a lot of the investors here who've constantly seen, whether it's tech or the industries they're from, what it's like to be in a flyover province and have so many different societal constructs in the business world not necessarily work in your favor. And that was the kind of whole premise behind the first fund. So they're doing it from a place where they understand the environment. They know that we have great founders, and they believe that we can help find those founders, invest in them, and help them be successful. We'll get into Emmertech, which is a little bit different there, but certainly when we're giving that message out to investors for both of our funds, we actually had to turn away money because there's so much demand towards the end, and we wanted to make sure we had the right size amount of capital, and certainly felt that we were supported by some really accomplished and impressive business leaders here in Saskatchewan, along with other organizations.
One of the one of the other things I'd add, Dan, to your question about how do we stay in our lanes, how do we work together, those kind of things is like Sean and I both have our own areas of expertise, things we're stronger at, and things that we enjoy doing more than the other one does. But it doesn't just stop with Sean and I, right? Like we have an amazing team around us, and whenever we're looking at a potential investee company, we always look at the quality of the founders, the leadership team, all that kind of stuff. And then how deep is your bench, and are they able to attract high quality people to work with them is usually a good barometer for whether or not they're going to build a strong, successful business. And we certainly feel pretty spoiled and with the quality of people that we've been able to attract to come and work on this little endeavor along with us. And so we're surrounded by a team of phenomenal folks, and then also ecosystem partners like Cultivator that you brought up, or that we were chatting about earlier with Jordan McFarlane and team. So we do have this community network around us, and then Sean and I sort of we generally do divvy up between areas of expertise, but also just taking turns on who jives better with different management teams when we're looking at companies, those sorts of things. And it becomes the other one's job to truly play a little bit of a villain role and poke holes in the investment thesis and make sure that we've thought things all the way through. So we do get to, we call it red team. We do get to red team each other every now and then and make sure that we're thinking things all the way through and engaging the right people to make sure we're making good decisions.
Well, this must be a huge part of taking other people's money and deploying it. With great power comes great responsibility, to quote another Marvel superhero. Is there a code of honor here? Is there a book of ethics? Is there core values that you guys go by so people feel really comfortable giving you their money?
I think so. Yeah, it's so we have the investment policy, which is a bunch of paper that Kyle and I have written up on what we're going to invest in. We have an investment thesis in an area that we're looking in. We have set terms that we're looking at, but none of that really protects the investors. The trust that they have in us to find the right companies, and more importantly, find the right founders and entrepreneurs, because that's when we're making investments into early stage companies that are still losing piles and piles of money as they start to try and build up their companies. The entire thesis behind what we're driving forward is what makes this founder uniquely special. Why are they the best in the world to win when it comes to solving this problem? I think that's the area that our investors get the most excitement over, is that they feel like we can really find those founders, find a way to invest in their companies at attractive valuations because we come in really early, and then work with them to help support them to building these larger companies. So I'd say that there's lots of stuff that we throw down on paper in terms of how we write our underwriting policies and valuation policies. Every investment comes with a 30 to 60 page deal memo that we put together, and then whoever's the lead is putting it together, and the rest of our team is trying to tear it down as we really make sure we make the right decision. But ultimately, it's, can we find the right founders? Can we find the people who are going to be able to drag this over the line? And that's the part where we feel pretty confident in the early results in our first fund, that we've been decent at finding just great people to work with.
I I do think, Dan, your question's actually quite funny. Just two weeks ago, Sean and I and some of our other team members, we sat down while we were all together at Canada Farm Show and wrote up our principles and our values as a fund, both for interacting with our founders, our investors, and each other as well. So to your question of how do you guide this? What's your North Star? Principles are something that mean a lot to us. They help guide our decision making. We're busy running around doing a bunch of different tasks like everybody listening to this podcast. And we need to have those North Stars and guiding mechanisms to make sure that we're driving towards good decisions, not only for us, but for all our stakeholders. One of my mentors always used to refer to it as being long term greedy, not short term greedy. And that means really investing in long term partnerships and taking the long view of things. And if you don't have a strong set of principles that help you make consistent decisions driving towards your long term goals, you can run amok of that. And so that's something we take pretty seriously as well as an operating group.
Principles, a la Ray Dalio. So is it a meritocracy you're running then, gentlemen? Is that what we're talking here? Is that what we're laying down?
That
Best ideas rise to the top regardless of who contributes them?
Absolutely. It's a must in this business. You have to run it that way, and I don't think we'd have it any other way.
Perfect. I was wondering about if it's hard to raise money or not, and what would you say to the 135 investors that never put their money into your fund right now, live on the internet? Well, we're not live; they'll hear it later, but
Oh
you
yeah.
can still say it to them. Say it to them now.
No, I get it. We're a relatively unproven fund manager. Um, we're born out of Conexus Credit Union, which has never really been done before, and we're betting on asset classes. The first one being prairie-based founders, and the second one being Canadian agtech founders that have never really produced before to the great extent that they should have. And our thesis is because no one's ever actually bet on them. So people who said no, like, we get it. We understand. It's certainly it gives us it gives us the right to say no ourselves, which we like. Like, no one's been rejected in the prairies more than I have, than more than Kyle has over the last couple of years.
You've earned the ability to say no. Blood,
Yeah,
sweat, and
I think
tears.
so.
Yeah,
Totally.
that's fair. That's fair.
Yeah, we've been put in a position where we've got to talk with a lot of exciting people, and not all of them really agreed with what we were building. And certainly a common theme was, go prove it and talk to us on the next fund. So I think that the process of raising capital is incredibly challenging, whether you're a venture capitalist or founder. It's one that I think is really important to go through to make you a judge of who to invest in as well. You get better at understanding who has that get back up mentality or the chew through the rope mentality that makes founders really special. But certainly there's never any hard feelings for those who say no to you along the way. I think that we're in the very early stages of what we're trying to build here, and it'll span multiple funds, and hopefully some of those people who said no, will reconsider for our next funds once the results are a bit clearer.
Yeah, it's one of the things we often end up saying to founders is it's not goodbye. It's hopefully talk to you soon or see you soon. It's never just the end of a relationship just because a particular transaction isn't able to work for both parties. That'd be a pretty cynical view, and I don't think would lead you to long-term success, especially in our business or for any of our founders looking to raise capital as well. So it's something that ethos we try to live ourselves as well.
Are we awash in money for egg tech, or is the spigot kind of shutting off? I heard sentiment shared on Cultivator Stories, something regarding we're back to really focusing on profitability. Has the market shifted?
Take this, Kyle.
Yeah, so the short answer is that what is it today, July 4th, 2022? Yeah, the market shifted over the last couple quarters. That's, that's for
Yeah,
sure. I could be
yeah,
I could be that could be out of date
yeah.
in a week from now, the way things are going, but it is it's funny. So we always go there's this event held every year. It's called the Canadian Venture Capital Association. It's where a bunch of fund managers get together and we all sort of share ideas on what we're seeing in the market, how we're being good stewards of the ecosystem and of investor capital to make sure that the Canadian venture capital market continues to grow and thrive, so we can continue to support founders. And usually, when you go there, it's about how can we work together? What are you seeing? What are you most excited about? And this year, when we were there, was a lot of here's what I have in my portfolio. Will you please come save it with some money because we can't find money in a bunch of different areas. And so what you've seen over the last at least quarter, if not two quarters, is a very obvious slowing down in the public markets. That's anyone who owns a stock or a mutual fund or an ETF knows, and that trickles all the way down to venture capital and especially early stage stuff like what we do. And so, if 12 months ago we were awash in capital and a bunch of capital chasing deals and not necessarily caring about the price that they were paying for it, you're starting to see that catch up with the industry right now. Purse strings are tightening a lot. Um, One of the terms that you often hear in later stage investing is something referred to as unit economics. All that means is that every time you sell a unit, you make money, you don't lose money. That's all positive unit economics means. And that's certainly coming back into the vocabulary. Before, what you would see are investors only caring about top line growth, drive revenue growth. Doesn't matter how unprofitable you are, doesn't matter if you make money because we'll just go raise more and we'll just burn more money. And so you're really seeing a slowing down of that, and a lot of folks, rightly or wrongly, view that as healthy for the system as well, where you can sort of identify these crown jewels and people who are actually building long-term, profitable, sustainable businesses. And so that has definitely been the slowdown that we've seen in the market across both Emmertech and Conexus Venture Capital.
Yeah, it's interesting to look at ag tech under that lens too, where so the general tech space is falling apart. Nasdaq's down 27 or 28% so far this year, and as Kyle mentioned, everything in the public markets that reflects the technology space all trickles down into the venture capital space. So we've seen significant headwinds into the tech space, but ag tech we think is actually moving in a bit of a different direction, where we started off the year as pretty far behind where we should be. If you look at ag tech in Canada, we're one of the largest venture capital funds focused on ag tech in all of Canada as a $60 million fund. And while it's kind of a cool badge for us to wear, that's not a good thing. Like, we need a lot more money coming into the ecosystem, where last year there was $182 million of venture capital invested in Canada focused on the ag tech space. And if you look over at the US, there's $4.9 billion US focused on ag tech in the US. So, lazy math says we should be 10% of the US, because that's the size of our population comparison. So we should be at $490 million, not 182. Take it a step further. If you do it on like farmland comparison, we're about a fifth of the size. We should be closer to $1 billion. Either way, we're way behind. So you take this opportunity, which we think is that delta between 182 and 490 or $1 billion. That's how much opportunity we think is here for investors to make lots of money. But then more importantly, there's supporting tailwinds for ag tech specifically. Agriculture as an industry is doing quite well. Food security is top of mind, whether it's the war happening right now in Europe, or California signaling that they want to reduce exports because of their water problems, and what that means for food security in Western Canada over leafy greens and vegetables and fruits and things like that. And then the intersection of ag tech and clean tech, we feel, is really starting to get a lot of attention here in Canada in terms of access to capital. So the tech space is struggling, and we're not going to be immune to that in ag tech, but we certainly see a lot of counteracting supporting mechanisms that are pretty exciting for us.
Fantastic point. I was just thinking about that juxtaposition between the rest of the market and where agriculture is at. And then I was thinking about your investors. If they could walk amongst the cultivator folk, right? And pick up what those people are putting down, like the fantastic technology that's growing food, or like growing food cleaner. You hate to use some of these buzzwords, but rubber is hitting the road. Who is your investor? How much do they care about that story in agriculture, or are they just purely looking at the numbers?
No, it's a good question, and I'm happy you asked, because it's something that we think is different about us as a fund. So Emmertech, we really tried to make sure that we were focused on raising capital from agriculture, that we wanted to be the fund that really understood agriculture and had great access to knowledge across the supply chain. And we think that'll help in a few ways. One is, purely from a greed standpoint, is getting, smart farmers and agribusinesses invested in the fund. Means we're going to have the smartest people advising us, and we'll be able to find, the best opportunities. So when we're looking for deals, they'll help us find the way. The second is creating a stronger linkage between the innovators and the industry. Cultivators doing a wonderful job of this as well, where there's just too many. We find ag tech, you see this in a lot of industries, but ag tech, uniquely more so. There's too many solutions looking for problems out there, where there's a lot of innovators building something and going out to farmers and saying, here's how you're going to, finally know how to run your business. And farmers are going, what are you talking about? We've been running this for generations. We have one of the more successful, entrepreneurial enterprises in this province. We don't need this solution that you're creating. But they are walking around saying, here's some problems that we have. And they are looking
Right.
for, certain solutions to be done. Building a fund where our investors are, farmers who understand the space, like Christian Hebert and Dustin Kukapal and Danny Cugden. I'm leaving a bunch out here. Agronomists who know the space really well. International brands like Viterra and Mosaic. credit unions focused on agriculture and insurance companies in the agriculture space. We've got this, really exciting amalgamation of supporters across Canada that have different levels of knowledge on different aspects of agriculture, and it means that we've got all these great experts that we can kind of pick off the shelf and work with when we're looking at specific deals, and then also we can work with when in terms of helping advise and mentor our founders too. So we think that our fund, again, we are such a small part of the overall ecosystem, but we do hope that the construct can create a closer linkage between innovators and farmers, which we think is continues to be a bit of a problem here in Canada.
Kyle,
Yeah, no,
you have anything to add to that, Kyle?
I agree. Like, so one of the another one of our mentor groups, or one of the better, in our minds anyway, one of the better VC groups, and they have a very industry focused strategy as well. It doesn't happen to be in agriculture, but they've adopted they've created and adopted an entire playbook of how to leverage their LP base that exists within the ecosystem they invest in and connect it with their companies to be able to drive the companies forward, working directly with their customers. And it's a playbook that we aspire to. We're nowhere near that yet right now as a fund, but we're sure as heck trying to catch up to that, because as Sean alluded to, we have some of the most amazing investor stakeholders you could imagine, especially for agriculture. Like one of the other ones being like the government of Saskatchewan, right? And so the government of Saskatchewan's trusted us with through Innovation SaaS, trusted us with their capital as well, and they have been an amazing partner for us since launch, with just connecting our companies with the right parties within the province, whether commercial, government, whatever is needed. And so when you start to see all of these pieces of sort of the nonprofit sector, the private farming sector, egg input retailers, the government, like all of these pieces coming together to create this ecosystem, it becomes a pretty powerful catalyst for our founders. And what has happened for too long in Canadian agriculture, especially in ag tech, is they've been undercapitalized, what we call generalist investors. So people who don't really get ag, who just want to dip their toe into it. And you can't really do that in agriculture. Like, you can't bleed $200,000-$300,000 into a company, create a minimum viable product that breaks all the time, doesn't work very well, ship that off to farmers for one of for one of their crop seasons, and have it not work, and then have them show up the next spring. Like, it just doesn't work the same way as if you're creating the next Facebook or Twitter or something like that. And so, what we've tried to do with this stakeholder group and this investor group that we've brought together is make sure that our companies are ready for market when they're going out, they have access to markets when they're going out, and that we're investing in the companies that are going to be attractive to the actual end users. And so we think putting all those pieces together increases our chance for the Canadian ag tech ecosystem to punch above our weight, as we very well should be.
So just to clarify, if people are investing in this fund, can they lend anything other than money, or they be involved in this story day to day by contributing or interacting any other way? If I put $1 million in it, do I get to drive that car on the highway a bit?
Yeah, so people are involved at. It's funny you ask. So people are involved at different levels. There are some folks, and this is true not only of our funds but other funds too, who just want to give you money. You go away, make it more money, and give them more money back. And that's perfectly fine. Those are wonderful investors as well. But for this particular fund, there's almost no one like that. Everyone has a vested interest in seeing the company's success, and so people are involved at different levels. So we have an advisory committee made up of 12 individuals who are all investors, who we lean on quite heavily when we're going through a diligence process and trying to make an actual investment decision. And so we always bring, like Sean alluded to earlier, we create these big long documents, these big long Word documents with a bunch of charts and graphs and words and stuff like that. And then more importantly, we bring in the founder to actually talk to that advisory council and let those farmers, growers, egg input retailers, super majors in the industry, ask them questions and get them comfortable that the route they're pursuing is right and it's a good investment for us, number one. And number two, provide some advice as to how they can work better with them as customers. And so our farmers or egg input retailer or whoever will often end up saying, you know what, we really, really like this individual. We think it's phenomenal. And here's 3 things they can do to build their company even better and to approach us even better. And so those those individuals and those institutions who really step forward and want to get more involved, we find incredible value from it, and we're always very, very supportive of it. And then just to move beyond the investors, you've been to a few of the cultivator events as well. We like to pull events where, investor or not, if you're in the ecosystem, we very much view ourselves as ecosystem builders and stewards. At least we strive to be. And so, whether you're an investor or not, we want you in front of the companies. We want you in front of growers. We want you in front of your customers and your stakeholders, because we're big believers in the rising tide lifts all boats theory. And so it's something that we hold near and dear and try to build up as well.
Ask the check writers. Good work. I love it. Well, that's interesting that there's a little bit more connection involvement. Why don't companies just bootstrap?
Yeah, good question. And for a lot of companies, they should. Like venture capital is for a very specific market. We go out and we ask a whole bunch of people for money. We put it into this fund, or they commit to putting money into this fund. We actually don't get all the money up front. We just call it as it's needed. And we charge them really high fees. Like the fees in venture capital are high. And so the only way to make all of this work is for us to find and invest in companies that are going to grow at extraordinary rates. Like if you're constantly investing in companies because you think you might double your money in VC, you're in a lot of trouble, because you're not going to have particularly good returns for your investors. And when you're taking on risk in these companies, you need to make sure that there's enough reward. So when we're looking at companies, they're often coming to us with $1, $2, $3, $400,000 a year in revenue, and we're sitting here and we like to think, do we think this company can triple, double? So in the next 4 years, will they go from a triple to a triple and then a couple doubles? And you've got a company that's on a really exciting trajectory in terms of its revenue growth at that point in time. If you have the type of company that can scale quickly, and the reason why venture capital is usually living and breathing almost exclusively in the technology space is because that's the industry that can scale really quickly. It usually has a significant software enablement to what makes it high growth, which means you can sell and scale a lot faster than if you're building large machinery or equipment or any other sort of physical assets. For companies that think that they may be a great company growing at 30, 40, 50%, which again is still super impressive numbers, you should try and find a way, if you can, to capitalize the company without selling off a whole bunch of it. Because if you get on the hamster wheel of venture capital and you're selling anywhere from 10 to 30% to your company at every given round, that's only an attractive outcome for the founder if the money that's being raised creates a pie that's a lot bigger in the future. So if you raise at a $5 million valuation and you give up 20% of your company today, you need to make sure that money, let's say you raised, we'll keep it simple, $1 million at a $4 million valuation. So post money, it's worth $5 million. You've sold 20% of your business. You want to make sure that $1 million, gets you to a position where your remaining pie, that 80%, is worth considerably more, because of the risk that you've taken on with other people's money and the headaches of having to talk to me or Kyle all the time. And you want to make sure that you've got something that is truly going to grow quickly. If you're raising this $1 million and next year your business is worth only $5.5 million, you've given up more of the pie than you actually were able to generate with the money that you raised. So you need to be confident that you have a truly high growth business that you want to scale and IPO one day, or sell it for $100 or $200 million, or it really depends on kind of how you want to make the numbers work. But ultimately, what we find a lot of the times we're talking to founders is they have great businesses that they can keep running, and they'll be millionaires one day and they're going to have an awesome business. It's just not a venture capital business. It's one that may be best suited to really add value in the Western Canadian agriculture space. That's a really great business most of the time, but may not be one where you want to be selling off a whole bunch of parts of your company or pieces of your company to VCs like us, If you think that it's going to be geographically restricted, if you feel like it's one that can really be a huge international success and it can grow really quickly, then that's when you should be thinking, okay, I am going to raise capital. So, sorry, to answer your question, the reason why founders should raise and not bootstrap, it's really because they think they're going to create a high growth company that's going to have a wonderful outcome in the future, and that money is going to allow them to get there faster. So they'll be able to move a lot faster because of it.
That uh, so that that's one side of the coin, the very internal building the business view. The other side of the coin, and we always encourage every founder we talk to do this too, is you have to find people who you actually want to work with, because when you take an investment from us or any other investor, you need to realize that you're signing up for 7-10 year relationship where we're talking every week, every month, every quarter. You're going to have a board of directors. You're going to have a bunch of different things that fundamentally change the way you operate, manage, and govern your business. And so that's not for everyone, nor does it need to be for everyone, but it is something you need to take really seriously. And so one of the things we often tell companies when we're looking at them is we'll send them the list of here's every founder from both Conexus Venture Capital and Emmertech. Take your pick. You can speak to any of them, and we encourage you to speak to any of them, to make sure that you get a sense of what it's like to work with us as a group, or what it's like to work with me as an individual, or heaven forbid, Sean as an individual, so that so that you know exactly what that's going to look like over the next little while. Because in all seriousness, like it's a lot of work. You go through, fortunately, a lot of ups together, but holy smokes, almost as many, if not more, downs, and that better be someone you want to work with. And so when you're thinking about should I be bootstrapping or taking on external capital, there's absolutely intrinsic business metrics and those sorts of things, but then there's also identifying partners that you actually think you can build this thing with, and that you actually want involved in your business on a go forward basis as well.
Well, by the very act of investing, you guys must change the fabric of that company. Like in quantum physics, if you observe a particle, that changes the behavior, and you can't see it in the unobserved state. So you guys can't see the companies in their unobserved state, but you must have a perspective on how much you're. I even for anybody who's a founder, they must chafe like it's like wearing an itchy wool sweater of reporting. And these are creative people who have a baby. They love the baby. They want everybody to love the baby. They take things personally. How do you deal with temperamental founders? Not that you have any in your current cohort, but
Well, so it's funny. Temperamental is one profile, but if we have 22 founders across the two portfolios, we have 22 different personalities and different founder types and different company managers. So you have e- for us to it's even an unfair I think question of like how do you manage it. It's not our job to manage it, and we never want to be in a position where we're managing or telling people how to run their company by any means. We have chosen to, as stewards of our investors capital, to invest in the individuals first and the company second. And so we trust implicitly the decisions our founders are making, and we try to be there as sounding boards. We try to be there as thought partners, and we try to be there to nudge whenever a nudge needs to be given. But we are not there to make decisions, give directives, or any of the other sort of evil private equity stuff that you end up hearing about. Should you ever read any of those books that come up on the topic, that's just not our role, at all. And if it ever is, that's a significant problem. So we take a pretty personalized approach with everyone. Some folks I text with every single day. Some folks don't like me calling them. They'll call me when they want to call me, and that's just the way that's the way it ends up working out.
yeah,
Yeah.
yeah.
Yeah, like as investors,
Sean, what do you think?
we don't apply a lot of pressure to our founders in terms of decisions they need to make, even when we're on the board of companies, which is probably the case for about 15 or 16 companies in our portfolio. Either Kyle or I are on the board of. Even there, like the only decision you're ever really making as a board member in our eye is whether you're going to fire the CEO, which we've never done before and hope we never have to. Everything else from there is
Wow.
really just a suggestion you're offering to them, and you try and always kind of provide it as that, where you're saying like, here's an example of something you should look through. Like if you're really telling them what to do, you've totally lost sight of what your role is as an investor, as a venture capitalist, and as a board member. And when it comes to the information they have to prepare, we have a different cadence with every founder to kind of fit with what they like. But the one kind of common feedback that we give to them is, is this working? Like, do you like the way that we're exchanging information right now and working with each other? If not, then how do we change it? Because if they ever feel like they're not getting more value than the effort they're putting into creating materials or setting up meetings or things like that, then we've done a significant disservice to the company at that point in time. Like every fund out there is trying to be seen as founder friendly, and I think we're all going to earn our stripes as we move into wartime mode with how many companies are struggling given the market conditions, and see who truly is founder friendly. But the intention for VC funds, I believe this is true with almost every VC fund in Canada, is you want to invest in great founders and you want to support them. And if you start telling them what to do, you may as well be the entrepreneur, and that's a very different playbook and a very different industry. So we try and stay true to that in terms of how we work with our founders.
Interesting. So if you guys are listening to a pitch from a company and you have one question that you can ask, what is the first and only question that you would ask that company? Kyle or Sean, if Kyle,
I can go first. Why don't I? I'll be Emmertech specific because I do end up asking this one
Okay.
all the time. Is who are the farmers that you're working with, and how soon can I talk to them? And it's because my favorite response to it, and it's not a good response, but my favorite response to it is, oh well, we're just building the product right now. We'll be talking to the farmer when it's ready to go. And that's always to me, my initial response is, I am so excited for you. You are going to learn an amazing lesson in 4 or 5 months when you go out to market with a product you just built in a cave, and are then going to go out and start working with growers. And so it's for Emmertech specifically, that is definitely my number one. I love that quite. And then on the opposite side, on the positive side, when folks say to you, oh well, here's the 12 growers I'm working with, here's the cadence I work with, of course you can get on the phone and talk with them. Here's the 4 mistakes they'll tell you I made with the product. Here's all the things we're fixing. Then you go, holy smokes, like this person is worth continuing a conversation with. So that's generally one of my favorites for that fund.
Yeah, I like to
Great answer. What about you, Sean?
dig into their origin story as well. You want to avoid the early stage founders that are just trying to tell mom and dad they're CEO of a company and not really actually passionate about building a problem. So I think that's the area that I kind of like to drill in first. But it was a really kind of base form. If there's anyone listening to this who says like, oh, okay, how do I actually figure out what to invest in and what makes sense? Really what we're trying to figure out at the early stages is pretty simple. It's what are the unit economics going to look like? And Kyle went into that earlier, but pretty simple. Like, how much is it going to cost to acquire a customer? How much is it going to cost to build the product on a per customer basis? And how quickly are we going to get paid back from the customer using this product on a monthly or yearly basis or one-time fees? And really, does that little intersection of the customer and our product make sense financially? And then the second one is, does this scale? Are they solving a global problem that we think we can get big investor returns for? Do we think this can grow really quickly? And then, why are they uniquely qualified to be the best in the world at running this company? Those are 3 kind of pretty simple buckets that we try and figure out. And there's a lot of more complicated things we go into that. We ask them to put together financial projections. And again, it's not rocket science. You're just trying to look at it and go, oh, this doesn't make sense. Like, here's one thing you assumed that actually will never happen. And the constant thing you see with early stage founders is they've got this product and it costs them $50 to acquire a new customer through Facebook or Google or their salespeople and things like that. And this is how much it costs each time. And they say, as we start scaling, it's going to go to $30 and then $10 and then $5 and $1 to acquire a customer. And that's when things get really profitable and exciting. And it just never works out that way. Like, it always ends up costing more than you're at today to acquire the customers in the future, because where you are today as an early stage company, and sorry, I'm totally butchering this question, but where you are today as an early
No, I
stage
love it. It's great though.
an early stage company, is you're solving this little problem that may not actually the solution. You may have the first in the world or the first in your area, or you're one of very few. And there's people out there who have this problem that are looking for that solution. And so they go on Google and they're searching for you and they're saying, how do you solve this problem for me? And they find you because they're super excited. And these are what you'd call the early adopters. So they're looking for solutions to their problem. Some are just totally mad scientists and they're just looking for solutions to see if they actually fit a problem in the first place. But there's this subset of people that go out and try and find your product, and that makes you think as an early stage customer, oh my gosh, people, it costs me like next to nothing to get these customers. I put a little ad up on Google and they're all searching me out and they find me, and it only cost me $50 to acquire this customer in terms of marketing spend and salespeople spend and things like that. When you start growing and you start spending more because now you have a VC sitting on your board and they're saying triple, triple, double, double, or do this faster or grow faster. Things like that. Don't worry, we're not actually that bad. But when you start bringing on investors,
sounds like Tim Hortons.
That's right. Exactly. I never thought of it like that.
It's going through the drive-through of VC. Triple, triple,
Exactly,
double,
the
double.
VC drive-through. It's us just yelling at you to triple, triple, double, double. When you start trying to grow really quickly, you are now going out and trying to find people who aren't actually searching for you. So you're trying to make them aware of this problem they didn't even know they had in the first place. And that happens more and more and more when you try and grow from $100,000 in revenue to $1 million to $10 million to $100 million. Is you have to create this whole funnel of awareness that's so much more expensive and gets more and more expensive the further away you get from the person who's starting with, I need to go find the solution to this problem. And that's what one of the base cases we see of little mistakes that, again, are not a big deal. We've invested in a ton of companies who made this mistake when they sent us their projections, and we walked through and kind of updated them to be something that we thought was more reflective of the truth. And those are, again, the little things that we're searching for when we're making investments. I think we try and make it sound more complicated than it is, but it's really just, are you going to be a great founder? Are you solving a problem that's a really big problem in the world? And can you find a way to get this to market cheaper than it costs for you to acquire the customer and make the product?
I love it. So Kyle said, who are your customers? Can I talk to them? And you said, when can I get my money back? That's great.
Exactly.
You guys are a great team.
Exactly.
But isn't that fundamentally one of the big issues in agriculture, is that you can never underestimate the value of understanding the culture. And if you're not from here, it's very hard to understand. I talked to a young gentleman at the show that was part of the agtech startup, and he was designing like a wonderful app in principle that would connect producers in kind of like a Airbnb way to like share their equipment. But I just thought, all the farmers I know, like that is their point of pride. They would not want their neighbor to touch their tractor tire, let alone drive it away and use it for a while and bring it back. Like it just, that kind of like culturally, you never underestimate how much producers love their own iron. And really, that just illustrated to me, like you can miss the mark so far if you don't talk to your customer. And if you somehow underestimate or devalue the intrinsic culture inherent in agriculture. So what is different about agtech from a conventional fund, from your guys' perspective and from the companies that you work with in agriculture?
Yeah, sure. So I think touched on one of the points earlier is just how they're capitalized and how you go to market. So you don't just bleed in a little bit of money, start testing things really early with a broad set of users, and then be told like, hey, this actually doesn't work and we don't care about it, all that kind of, like, you have to build a finished thing first, which is why it's so important to have stakeholders with you and be engaging with them as you're building uh, your product. The second one is, for most of the companies in Emmertech, for within agriculture, we often recommend not a board of directors, which is sort of just a governance thing that neither Sean or I take care of, but an advisory board that's usually what we call a grower council, if it's crop or producer council or whatever, where on a regular basis you are engaging with farmers to make sure that you're getting good advice. They're holding you accountable to what you said you were going to do, and that they're actually helping you drive real product decisions and real go-to-market decisions. You don't see things like that as often outside of agriculture. Like it's not that common to have like a user council or something like that. In the rest of VC, at least it's not as pronounced and it doesn't drive decision making in the same way. And those individuals aren't sort of rewarded in the same way. And then I think you can often walk in as a generalist without necessarily a background in the industry you're targeting. More generally, within agriculture, you kind of have to have at least someone on the team who comes from industry and understands the industry inside and out. You can't just be a band of four outsiders who just walk in and are going to start taking over the industry. You do actually need to have some real experience, and ideally someone on the team who's actually operated a farm, whether it's livestock or crop, like depending what you're building, and actually having that real industry experience is super important in agriculture and can be much less important in some of the other stuff that we look out of the generalist fund.
And we've really tried to, bake that into our entire culture here. It's in our name. We've got a bit of a silly name in Emmertech, but really the reason behind it is, Emmer is one of the first strands of wheat that was ever cultivated by human beings. And it's a reminder to us as you've got, a tech nerd from Vancouver like me that, you need to constantly, um, remember that agriculture is thousands of years old and that you are trying to sell product into some of the most innovative entrepreneurs in the world, which farmers are, particularly here in Canada. But that they have established processes. They have businesses that are generally super well run and successful, and that you need to approach it from the lens that we are entering into their world. And that's the whole thesis behind Emmertech that we've put together in terms of just the name and the culture. But on the first part that Kyle touched on, that's super important for us. Is you got to bet a lot bigger at these earlier stage companies than you do for a generalist tech company. And a good example of that is we invest in this company called Salon Scale. I imagine it's a pretty big wrong turn in the podcast world for any hair salon owners to end up on this podcast. But if there are any there, it's a wonderful company that they should go check out. But we invest in this company called Salon Scale. Alicia Soulier, kick-ass founder based out of Saskatoon, had run hair salons for her own hair salon for a long time, and then built this product that essentially it weighs the color of the hair color that you're using on clients and allows you to truly understand the cost on a per client basis. A lot of other stuff that it does, but at its fundamental level, it helps hair salons become more profitable. And when we invested in her company, we gave her about $400,000. She was doing like $1,000 a month in revenue. And we iterated quickly, and we had this MVP product that barely worked. And we were, rolling. I keep saying we. It's all Alicia and her team, and we were just kind of sitting there in the background and giving them high fives. But they moved really quickly, and the product didn't work all that well. And we got feedback on the fly, and we kind of figured it out over time. And that was back in 2019, and fast forward to today, and they're doing about $115,000 a month in revenue, and growing like crazy because we took this MVP beta product, scaled really quickly, iterated on the fly, and built this business that now looks really primed to be one of the next great technology companies based in Saskatchewan. As Kyle mentioned, you can't do that with farmers. You can't do that with people who have all of their net worth or a big chunk of it in the fields every year, and they've got 30 to 40 at bats in their entire career of growing a crop. Like, these are people who are incredibly innovative. They are early adopters. Like, holy smokes, when you talk to farmers that are in regions that's covered by Starlink, you'll see just how quick they'll pick up new technology if it brings in an ROI. But they need to know that it's reliable. They need to know that it's not going to break down. And that's the piece that we think that the VC playbook in Canada has gotten wrong up until recently, and that we hope we're one of many funds here in Canada that starts changing that focus. And that means instead of giving the Salon Scale of ag tech, and I don't know what that would be, $400,000 so we can release this kind of half-done product and learn quickly, you got to give them $1.5 million to $3 million so they can build a product that's truly ready to start scaling. So we think that's the biggest difference is, as Kyle mentioned, how you capitalize them and how you surround them with industry.
It's a really interesting point about cycle times for products. And, once a year you get a crack at growing a crop. And a lot of the products in the industry sort of follow along with that. And I think you got a relationship build a lot longer, prove it out over a lot longer, and it's just it's a different beast. So it's interesting to think about. Why don't you guys talk a little bit about some of the really, really exciting companies that I'm sure farmers will be using in their fields today and in the future? Let's. I mean, exciting stuff.
Yeah, sure. So you've had I think on the podcast before you've had a few folks, so it's probably going to be
Mm-hmm.
repetitive for some, but I'll start off with maybe Lucent Biosciences. I think we might have
Absolutely, that'd be a great one.
mentioned them
Yeah.
earlier. Like them for a bunch of different reasons. As Sean alluded to earlier, we're big supporters of the intersection of ag tech and clean tech. We think anything we invest in ag tech is almost by definition clean tech, and Lucent fits very squarely in that. They also hit on another kind of buzzword that you hear a bunch right now in circular economy and reducing waste and taking what is now essentially a waste product and creating something great out of it. And so in Lucent, that's exactly what we see. So they're truly innovating the way that micronutrients are at the current time, anyways. Only micronutrients are being delivered to plant and to soil and the microbiome by partnering with food processors and using waste streams to extract the cellulose, which then they wrap around micronutrients. So whether it's boron for canola or whatever it is, you're then able to apply it to the soil, and you accomplish a couple of different things. One is the delivery mechanism through the cellulose allows the micronutrient to be ready when the plant needs it and when it wants it. And the second is you can significantly reduce leaching. And I know Sean's been in Saskatchewan for at least a few years now, and having grown up there, by the time you reach the late fall and you're driving around, holy smokes, leaching's a thing. You can see it, and anything that's able to reduce that is significantly beneficial to the ecosystem. And so that's one of the ones that we're truly excited about, and they're going to be hitting scale at the back part of this year, or certainly rolling into next year. And we think that they have a really big opportunity, starting off in micros and then expanding off into your NPKs or some other larger nutrition products as well. So that's one to watch. It's also one that we're really proud of. It started in Coquitlam, and all their manufacturing was done in Coquitlam, out kind of near me in Victoria here. And all of their production capacity is now going to be done in Saskatchewan. So we're pretty excited about that as well. We think it's going to be a great job creator. We love that the manufacturing facility is going to be located right next to where their customer base is. That helps with unit economics, which is the third time we've got to say that here today. So we're we're
Yeah.
we're pretty we're pretty
It's
excited about all
vying
that.
for the title of the podcast, unit economics. What does it
Exactly.
mean?
Two
Why
more,
does it matter?
two more, and we get
Um,
bingo. So that's one that we're pretty
well,
stoked about.
we love Lucent. Let
Yeah.
me tell you,
Yeah, they're cool.
we love Lucent.
I
So
was saying before we kicked this off that I was over at my wife's family, that their 105th anniversary of their farm in Manitoba, the Moran family. Awesome, innovative farmers out there. If I come across as a bit foggy, it's because I've been trying to keep up drinking with farmers for a long week. Yeah,
yeah, it's fair.
yeah, they've started using Lucent as well, and I think they're indicative of a whole bunch of farmers across Western Canada who are all giving it a try this year. So this is kind of our big year as we go from a lot of trials that you guys are super familiar with into working with farmers to prove results and hopefully demonstrate that we can be a trusted input for them in the years to come. But they're one that's pretty cool. And the other piece to touch on for them, and if we take this long for every company, it's going to be a disaster. But Kyle mentioned they moved from the Lower Mainland to Saskatchewan, to Little Rosetown, Saskatchewan, which is awesome because it shows one of the other pieces that we get really excited about here, at Conexus and amongst our entire investor group, is agtech's this really unique opportunity where it doesn't really belong on Bay Street. Doesn't really fit in downtown Vancouver. Not that to say there won't be great companies coming out of those ecosystems, but for us little ecosystems across the country, we've always kind of fought over the crumbs. You saw this with AI, mobile, software, fintech, health tech, all these different waves of innovation that attracted a lot of capital. We've all done our own little kind of prairie spin on it, or maritime spin on it, or Vancouver Island spin on it. Egg tech's different. It belongs here. It belongs in the agriculture ecosystems and in Saskatchewan and Manitoba, southwestern Ontario, parts of the Maritimes, the Okanagan and Fraser Valley, and all these spots that have never really had their time in the spotlight when it comes to being able to build great tech ecosystems. I think what we've seen with Lucent and them relocating their manufacturing to Saskatchewan to really scale the company is the first sign that the prairies are really going to have an outsized win when it comes to the impact that we can have in terms of the overall ag tech space. Actually, I can give an example.
Yeah, that's a great example of a company, and just the execution has been fantastic. We've been a part of that too, and it's just been fantastic to watch their evolution. But what about some of the other companies, just in brief, just to give the listener a scope of who you're investing in and the kind of things that they do? If you could do that, that'd be
I'll
great.
go blitz through a couple of them. One's called Tech Brew
Sure,
Robotics.
please.
So Tech Brew Robotics is based out of
Love
Salmon
that
Arm.
guy.
Awesome. Mike Boudreau is a killer entrepreneur who's been building robots before robots existed, as far as I'm concerned. And the thesis behind what they've created is the mushroom industry is having a tough time with staffing, which makes sense. Like, I've been and toured some of these pilot farms that they're working with, and it's awful. Like, it's cold and humid, which is not really an experience the human gets very often. Like, cold and damp is not something that we see a lot of. It's super smelly, and you have all these kind of different racks in these industrial facilities that are growing mushrooms that you've got to be kind of going up and down, and it's just an awful experience. So the way we typically solve it is through kind of temporary workers, foreign workers, and things like that to come in and staff these mushroom farms. That's not really a scalable solution for a farm that operates all year round. These mushrooms grow really quickly, and you can't just have it sit dormant for a couple of days if you don't have staff there. You have to pick the mushrooms. So he's created a robot that goes around and picks them. That's a really cool one. Another one that we've just invested in and hasn't actually been publicly announced yet is a company called Barrelwise. We're happy to put it on this podcast, but they'll have their big public announcement in the coming days. And that one's cool because you go from smelly mushrooms, and we deal with like cow poop and other things like that as a fund, and all great companies that are doing some neat stuff. But this one's in the winery space, which is probably at the the top of the ladder in terms of the cool factor in ag tech, and they monitor sulfur dioxide content in wine barrels, which is the biggest indicator if a wine barrel is about to spoil, which can cost for premium wineries $30,000-$40,000 in terms of having to downgrade your really fine wine into something that ends up in the box. And for them, they're really cool founders that are solving a problem that they're picking up a lot of customers in Napa and California, in Napa and the Okanagan and other kind of big wine regions. Sticking with wine, this will be my last one. Kyle, I'll pass it over to you to talk about UCO and other ones. I'm trudging in Kyle's territory now, as this is one of his files, but we're both just such big fans of IntelliCulture that I think you guys have had Cole on here, but again, company that is in the vineyard management space, along with the in the leafy green space and orchard space. Bunch of super smart guys who are building cars at the University of Waterloo, and then getting jobs with companies like Tesla, and realizing there's a whole new opportunity in terms of being able to get better insights on the equipment on a lot of these kind of fixed crop farms. And they created this solution that not only helps you with diagnostics on your equipment for the farm, but then also alerts you if perhaps one of the workers missed a row, and that can create, in the vineyard space, huge issues with things like powdery mildew outbreaks, where you have someone who thought they hit every row, they just missed one, and that's really all it can take in terms of not being able to apply the right inputs there. So that's another one that's grown like a weed in terms of their ability to start scaling, and we're pretty excited about.
Unsurprised to hear
Awesome stuff.
Sean take the two wine ones, but I'll just
That is progress for mankind. Well, especially after a weekend of hard drinking with the
Right.
farmers.
exactly.
Wine brain.
I've got just one more, and it's sort of funny. Like, when you talk about, you've got Lucent, you've got Tech Brew, who are very much in the real physical world. Like, you're producing a micronutrient fertilizer, or you are producing a mushroom picking robot. Then you've got IntelliCulture, who partners with different suppliers for their hardware, and they're truly an analytics company when it comes right to, like, they're much more closer to a SaaS company, as is UCO. And so UCO partners with a bunch of different data providers. So whether it's weather stations now moving into soil monitors and other data sources, and provides recommendations on when, where, how much to spray. Right now for disease, but moving into insects and then other forms of like irrigation and things like that down the road. And what we talked about earlier in terms of what we look for in our teams and how important it is to have industry experience. One of the founders forever was with Syngenta, and he was running for a while. He was running the potato seed program globally for Syngenta, and that's how Yuko got started, was targeting potatoes and those sorts of things. And he partnered with just a very, very strong technical CTO who I think if you asked him, he might even tell you he didn't even know how to spell agriculture. Like he just didn't come from that background, and which is also
Yeah.
brilliant, by the way, because he brings so much expertise from other industries that it's new and novel to agriculture, but proven in other areas. And so you mash these two founders together, and holy smokes, do you have a catalyst for something pretty special there? So that one's been a lot of fun to be a part of. We also have some phenomenal co-investors, like TELUS Ag is in that one with us, the gentleman over at Ag Capital Canada as well, and PIC Group out of Saskatoon, who are part owners in GMAX. And so this is all back to the whole ecosystem and stakeholder engagement thing we were talking about before. Is I feel like that investment right now is a pretty good indication that we're all pulling on the same side of the rope to be the ecosystem, to build the ecosystem, and we can be friends and enemies in different scenarios along the way. I always affectionately refer to the AgCap Canada guys as our frenemies, and those sorts of things. So as we're going through and try to build this together, but it's that one's pretty cool as well, and we're fortunate to be a part of it.
I think you make a really interesting point about people outside of the agricultural industry too, because we don't need just people in ag and from ag, because then we kind of always end up doing it the way we always done it before. And if we don't challenge the things we're doing now, you're not going to see the same level of innovation. Sometimes it takes somebody from outside of that industry to say, well, why don't we do it? Like, why couldn't you? Well, we've never done it that way. We've always done it this way, right?
Same thing goes for the rest
But
of
sometimes
tech.
that's where the best.
Like we need more farmers
Yeah.
to come in and be entrepreneurs in generalist tech companies. Like farmer ingenuity is something that has a huge implication as tech founders too. We see that with Catherine Renier, who runs a very successful company here in Saskatchewan called Coconut Software. Raised about $35 million in their Series B round last year, and they have a financial technology product that sells to banks and credit unions across North America. Someone who grew up on the farm and understands the practices of what farmer ingenuity and practicality brought into the entrepreneurial spaces. And I'll go on a bit of a tangent here, but I came from the Vancouver tech ecosystem, and back in 2014, for all of us nerds who are trying to build something and be something, our three kind of heroes in growing up in Vancouver were all three rural entrepreneurs who built some pretty kick-ass technology companies. One being Marcus Friend from Hudson's Hope, BC, built Plenty of Fish, sold that for upwards of close to $1 billion. Ryan Holmes was from about 30 minutes outside of Vernon, and he built a company called Hootsuite, still operating today, and super successful company. And then Stuart Butterfield came from, I think it's Lund, BC, so about an hour north of Powell River, and he built Slack. And so we saw, what rural British Columbians, given the chance as entrepreneurs coming into Vancouver to build their companies, that the approach they take is just different than us city folks, and they could build some pretty amazing companies. Same here in town locally in Regina. One of the most successful technology companies, in my mind, ever to come out of Canada. One of the worst told stories of Canadian entrepreneurs is Gas Buddy. And that was built by Dustin Kupal. Grew up farming here in I think they're in Sedley, so just outside of Regina. He's now got this company called One Shot Golf. That's this new mobile app game where you're playing golf, but you're controlling a real robotic putter on a real course. That's absolutely taken off. Like their hashtag on TikTok, I think, has had like 280 million views now. They're just one of the, again, more exciting companies in the tech space here in Saskatchewan. But all of what they've built at One Shot Golf is farmer ingenuity. Like you can't give someone $50 million in San Francisco and say, go build this mobile app game, because you'd be missing, the key ingredient, which is, Dustin welding at 1 a.m. at his farm to build these putters that they've created. Like it's not a playbook you could recreate somewhere else. I think that's, so as much as we need, smart tech minds and just smart entrepreneurs coming in and solving problems in agriculture, we need some smart farmers coming into the rest of the generalist tech space, because they've got, a work ethic and a, fix it with duct tape, do it yourself mentality that makes you really strong as a generalist entrepreneur.
Well, and besides karaoke in the cab, I'm thinking of things that you would like to invent that you think the world needs is, near and dear to farmers' hearts, I'm sure. So I was also thinking of those 3 companies, Slack and Hootsuite and Plenty of Fish. I've been pretty avid users of 2 of those 3, so I'll leave it to the listener just to guess on that. Gentlemen, let's wrap this up. I could talk to you guys for so much longer, and I'd like to be, an angel investor one day too, or maybe get something. When you said $35 million, I got a tickle in my tummy. Like Dad was driving me at the turkey trail with the big hump, and we always go the twisted trail, I think we called it, after church every Sunday. We go really fast over the big hump. You get that tickle in your tummy. Like $35 million. How does that feel when you wake up as, whoa, I got to go to work? Dad always said payments get you out of bed in the morning. So that's the ultra version of that. But just wrapping it up, gentlemen, here. What is next for you guys? Like raising more money, deploying more money, rinse and repeat, or what's the next big thing?
We've got these 2 funds we're running right now, and we'll certainly be looking at raising a 3rd fund, maybe later this year, early next year. But we've got upwards of 80 people almost that have trusted us and invested in us, the organizations that have trusted us. We got a lot of work to do to make sure that we're finding great founders, investing in them and supporting them, and certainly have our hands full between Kyle and I and Harrison, and Aaron and Rob and Evan and Harrison and Lou. We got a team that's all hands on deck, and certainly need to kind of ride out the next few months to make sure that we're doing right by our investors and doing right by our founders. Once we feel comfortable and that we're in a good cruising altitude spot, then we'll look at potentially launching more funds. Because
I think in the short term, that's right. Like one of the things we alluded to before is we have this amazing ecosystem of partners, and we need to get a more systematic way of getting them involved with our founders and with the companies. So that's really high up on the priority list right now. Deploying the capital responsibly is really high up on the priority list right now, and always will be, and those sorts of things. And then just if you take a longer term view, I think Sean and I would tell you we feel like we're probably on our own 1 yard line, and we have about 99 yards to go across what we want to build here across Western Canada in terms of both the generalist and the ag tech ecosystem. There's so much opportunity in this geography, in these jurisdictions, in these asset classes, that we're just excited to be a part of it, hopefully doing some good with it, and we're excited to keep pushing, and hopefully a lot more to come.
Well, Godspeed, gentlemen. You're truly doing great work. Because like you say, everything that you guys are investing in is really a step forward in food production and humanity's security. Might I remind everybody, we're seeing world events like these are big fundamental things. Energy, food, we need them. So you guys are helping everybody make strides that are critical that they couldn't make otherwise on their own.
I do think it's important to
And
say,
it takes brave souls to go ahead and do
we
that.
talked about this earlier, but how important the intersection of ag tech and clean tech is. We think that is such a huge opportunity. But also the piece that we want to make sure people don't lose sight of is agriculture is responsible for about 20% of the world's emissions, depending on which studies you look at. That feeds 100% of the world. That's not such a bad trade-off in terms of the current impact. There's room to do a lot better. We do see that as a huge opportunity there, but sometimes we have to remind ourselves we're really pushing how do we find more opportunities at the intersection of ag tech and clean tech. Is the base state ain't that bad right now in terms of what the production is doing in terms of its offsetting carbon emissions. But we do think that's an area where sometimes we get a bit lost in the narrative ourselves.
If you guys could invest in something that gets rid of death but still reduces emissions, you guys would be superheroes. You would be real superheroes. Ask any farmer about death. And, obviously somebody in California came up with that because it doesn't really work up here. But that's another story for another episode. Oh, it's just great to get to know you guys better. I had so many questions. It's fascinating stuff, and just really proud and excited to even be remotely a part of it. With the cultivator and with you guys, and I was thinking about the gap between the level of investment here in Canada and what's going on in the U.S. And I think one true metric of success is when you have a whole bunch of people starting to emulate what you're doing. That'll be good. And I think people will. But you guys are the pioneers right now, just like the pioneers who turned over the sod when you first got here. You shoot away the buffalo and you turned over the sod and you built a little mud hut. You're like that, just different.
Thank you, and more importantly, thank you for all the
But
work you're doing, helping give a voice to a bunch of these hungry tech entrepreneurs who are trying to find their footing in the egg space. It's tough going out and getting those first handful of customers and being able to tell your story for a lot of these entrepreneurs, both inside and outside of our portfolio, to be able to come on your podcast and talk about the cool shit that they're doing. We really appreciate that as an industry and as an ecosystem.
Yeah, we need more people like you.
huge honor.
Thanks.
Hey, I appreciate it. And those founders, they earn it. They're just the most tenacious people I met, and they have such a mission. And if only every individual, piece of humanity could be as empowered and have such purpose. I wish that for everybody, because it just propels you in your life, and it does so much good. And for people who haven't found that purpose yet, I hope they can. And agriculture is a great place to do it. I imagine you guys find a really high sense of purpose in what you do on the daily, right?
Big time. Yeah, absolutely.
Well, gentlemen, it's been a pleasure. I'm sure we'll talk again soon, if not on the podcast, then maybe in real life. But thanks for sharing all your wisdom. How is the best way for people to reach you? You guys are quite attainable. I mean, you're up in the clouds with all that money. Let's be real. But I mean, you just phone call or something, or Snapchat, or how do you get?
Keep in mind, it's not our money. We're living the stressful life right now. No, the easiest pathway to get a hold of us is just vc@conexus.ca, or finding us. I'm active on Twitter. We're both on LinkedIn. We're pretty accessible through whatever channels you can get. So we're always open, and if anyone has an idea or they know a founder that's doing some cool stuff, like, we are super greedy and hungry for deal flow. We always try and make sure that the entrepreneurs are left better off, even if we don't invest in them. And we are never upset when someone reaches out saying, "Can we have a half hour of your time to pitch you a company we're working on?"
I'm picturing you guys on the beach with satellite phones right now. Gordon Gecko. Greed is good. I think greed came up. We're not going to use that in the title, though. Don't worry. You got to dive deep in the content of the podcast to get the real meaning of greed in a positive way. Positive greed, 2022 greed. Thanks, Sean. Thanks, Kyle.
Right, good.
Thanks, Dan.
Thanks for coming on the show.
Thanks,
Thanks a
Dan.
lot.